Industry Voice: How Building Performance Modeling Delivers Measurable ROI and Future-Proofs Upgrade Programs. This industry voice is by Christy Martell, Senior Vice President at IES, a global leader in building performance simulation software. Christy helps facility owners and operators across North America use data-driven, physics-based modeling to identify savings opportunities and maximize ROI from building upgrades. As energy costs continue to climb and capital budgets tighten, organizations across every sector are asking the same question: which retrofit investments will actually pay off? From lighting upgrades and HVAC replacements to deep energy retrofits and BMS upgrades, the opportunities are vast, but so is the uncertainty. For facility leaders, the range of opportunities and choices available can stall progress. Even projects with solid sustainability goals often struggle to move forward without clear financial justification. That's where building performance modeling comes in. Once viewed as a specialist design tool, today's modeling and simulation platforms are increasingly being used by owners, asset managers, and facility executives to forecast the real-world return on energy investments before a single dollar is spent. From intuition to evidence. In the past, energy retrofits were often guided by intuition or vendor claims, but performance modeling provides a data-driven alternative, using a virtual replica of the building to simulate how it actually behaves: heat flow, air movement, solar gain, and occupant patterns under various scenarios. By testing upgrades in the model first, organizations can identify the most cost-effective improvements, estimate payback periods, and verify post-installation performance with continuous monitoring and verification. But the real value comes from the underlying building physics. Unlike simple calculators or rule-of-thumb tools, physics-based simulation accounts for how heat, air, moisture, and daylight actually move through a building over time. That matters because most retrofit failures stem from interactions between systems, not the systems themselves. A physics-driven model captures those interactions with far greater accuracy, making it possible to predict performance under real-world operating conditions. It's also what differentiates this approach from generic energy modeling. Building physics provides a level of precision that owners can trust when making 6- or 7-figure investment decisions. The result is a clear, defensible business case for efficiency investments and a way to mitigate both financial and operational risk. According to JLL, light to moderate energy retrofits can yield up to 40% in energy savings, depending on property type, representing as much as $11 billion in potential annual savings across the U.S. building stock. Modeling helps owners capture their fair share of that opportunity by pinpointing where those savings are most achievable in their specific assets. Quantifying the payback. One of the greatest strengths of physics-based modeling is its ability to translate technical performance into quantifiable and measurable terms. The National Institute of Building Sciences notes that pairing high-performance HVAC equipment with whole building design can reduce energy costs by 30%, with a typical payback period of just 3 to 5 years. A performance model can predict that payback more accurately by incorporating climate data, occupancy schedules, and equipment efficiency curves, factors that simple calculation tools often miss. Modeling can also uncover hidden benefits that affect ROI, but are rarely captured in baseline analyses: improved occupant comfort, extended equipment life, and avoided downtime from system failures. Making retrofits bankable. Investors and lenders are increasingly rewarding efficiency. A CBRE analysis of 20,000 U.S. office buildings found that LEED-certified assets command 31% higher average rents than their non-certified peers. So for owners looking to attract capital or tenants, being able to demonstrate predicted performance and then prove it after upgrades adds tangible value to the asset. Simulation bridges that gap between design intent and operational results. By creating a calibrated model that mirrors actual utility data, facility teams can validate that a project's financial assumptions hold true in operation. That validation strengthens ESG reporting, supports green bond eligibility, and helps justify future rounds of investment. In effect, the model becomes both an underwriting tool and a performance verification system. Benchmarking the impact. The financial impact of modeling is not theoretical, it is reflected in market data. The recent AIA 2030 Commitment Report, for example, identifies projects that used energy modeling as achieving an average 60% reduction in predicted energy use intensity, PEUI, compared with 50% for non-modeled projects. That's a 10-point gap that represents millions in avoided utility spend over a building's lifetime. Our experience at IES bears this out. In one project in Athens, GA, a 25.8% energy reduction was achieved, compared with the baseline design. An integrated design and engineering firm, HGA, used our building physics modeling to help Metro Health's Glick Center in Cleveland, OASH, identify a 54% emissions reduction opportunity and 434 Ks in cost impact potential. A smarter way to prioritize. Perhaps the most immediate ROI from modeling comes from what not to do. By using parametric simulation, the ability to test multiple upgrade paths quickly and side by side in a virtual environment, facility managers can see how different measures perform under the same conditions and avoid investment decisions that won't deliver meaningful returns. For example, a parametric analysis may reveal that replacing glazing offers minimal benefit compared to recommissioning air handling units or optimizing control sequences. Because the model can isolate the impact of each measure and rank improvements by cost and performance, it becomes far easier to redirect hundreds of thousands of dollars toward faster payback strategies and reduce the risk of stranded capital. Parametric simulation also helps align retrofit planning with capital budgeting cycles. Because it quantifies both savings and costs over time and across alternative scenarios, it supports phasing strategies, allowing facility leaders to implement measures in logical, financially sustainable increments rather than all at once. From one-time project to continuous value. The value of simulation doesn't end once a retrofit is complete. When the model is updated with real-time operational data, it becomes a living digital twin, a platform for continuous commissioning. This enables facility teams to track any performance drift, detect anomalies, and test future changes virtually. In an era of volatile energy markets and accelerating climate risks, that ability to forecast and manage ongoing cost exposure is becoming just as important as achieving initial savings. For multi-building portfolios, digital twins also make it possible to benchmark performance across assets and identify which facilities offer the best ROI for future improvements. What begins as a one-time analysis can evolve into an enterprise-wide decision support system, one that keeps buildings AI ready for future analytics and automation. Overcoming the barriers. Despite these advantages, many organizations still see modeling as complex or expensive, but the reality is that modern tools are more accessible than ever. Cloud-based platforms can now import BIM, metering, or BMS data directly, cutting setup time dramatically. For a typical commercial building, a calibrated model can often be created and analyzed in days or weeks, not months, at a cost that represents a small fraction of potential savings. The payback from accurate modeling can be realized before the first retrofit measure is even installed. Moreover, as more cities and states introduce performance standards and carbon reporting mandates, modeling is becoming a compliance necessity. Early adopters are finding that what began as a cost avoidance measure quickly becomes a competitive advantage. From energy costs to enterprise value, high-performance building upgrades are no longer a sustainability luxury, but a financial strategy. And building performance modeling gives organizations the data they need to prioritize such investments, secure funding, and prove results. When every dollar must demonstrate return, simulation transforms energy efficiency from a leap of faith into a measurable, future-proof business decision.